Okay, so Zach, today I wanted to talk to you about some luxury properties and those different types of loans. Mostly people know them like as jumbo loans, but I have just run into a situation that I wanted to talk about, and I thought it would be a good idea to make a video about this because even the most wealthy or the most financially savvy people run into issues when they're working on their loans. So I have a situation where I listed a home in Farmington, Utah, and it is a luxury property. We went under contract with a buyer and I verified their funds. Everything was great. They had been working with a lender. Unfortunately, just before our deadline, our financial and appraisal deadline, they wanted to swap lenders because they had not done their homework. They had not compared, they were not prepared to follow through. So they were still doing some homework. And unfortunately, like the very day of the deadline, they were worried about losing their earnest money. So the agent reaches out and says, we just want another week. And I was like, whoa, because that put us changing the date that we were signing as well. So, anyway, end of story. What ended happening is that although my seller had agreed to give some extra days, my seller wasn't available to sign the paperwork on the spot. So the buyer's agent and the buyer freaked. They canceled contract. So they totally canceled contract. And my seller was like, I'm done. I'm done and done. There's other people that want this house. They're acting sporadic and crazy. I'm not going to work with them. Like they shouldn't have waited till the last minute. I've done everything I can. We had negotiated them through inspections. They had enrolled their children in the schools. They had introduced the kids to the neighbors. They were making friends. I mean, they were moving in. They just left out like one of the very, very most important pieces, and that is making sure that they were financially sound ahead of time. It's so important to be ahead of the game. So, Zach, talk to us a little bit about financing and staying ahead of a game and like what tell us about jumbo loans because just define it. What is a jumbo loan?
Yeah. So jumbo loans are anything that's above the conforming loan limit. So for conventional loans, they cut off at 806,500 and they say, hey, if you're above this by even a dollar, you're now in a different, realm. You're in jumbo loans essentially. And so as far as that goes, there's different guidelines, different lenders specifically for those loans. Typically, they have a little bit more stringent guidelines. Like for instance, most debt to income ratios on a conforming loan can go to a 50%, where with on jumbos, they're probably closer to a 43, 45% maybe. But yeah, they like to look at that thing. Sometimes they require a little bit more reserves, sometimes even a little bit more down in terms of payment and stuff like that. But they're a really good loan product. The biggest thing that I see is people need to have their ducks in a row and know what program they're going to go with. Because when I go pull up specifically like jumbo lenders, I'll probably have like 8 to 10 different jumbo lenders, but each one has a different palette for what they want, whether it's a higher down payment or whether they're like, hey, we want just W-2 borrowers. We don't want to work with self-employed borrowers. And so there's a whole myriad of different options. But the biggest thing is you have to know which option you're going to go with and get pre-approved specifically with that one. That way, you're just not going to have any hiccups.
Yeah, and I
So,
think from a real estate perspective, I mean, a lot of times, like, since we don't do the loan stuff, and we know that we're dealing with a luxury client or a high-end client, we know that their finances are secure. So, as an agent, a lot of times it's easy to just be like, they're good for it. Like, this is all good. And I feel like I mean, unfortunately, in my opinion, I feel like this agent lost this home for those buyers. If the agent would have guided the client better and been more involved and said, look, we need to be fully prepared before we make an offer, they would be, their kids would be going to that school. They probably would have started today and they would be playing with those neighbors. But since all of that went down, it's unfortunate. But I do think that that happens, unfortunately, more than it should, for sure. So let's talk a little bit more about the down payment expectations. You kind of talked about it, but let's talk a little bit more.
yeah, so as far as with different loan amounts, they kind of require a minimum down. So like you can't go get a $2 million house and say, hey, I'm going to put 3% down. The lender's going to look at you and say, okay, come on, you need a little bit more skin in the game if you're going to play in this realm. So typically we see if you're going to do about a $2 million dollar loan, you got to at least have 10% down. If you're going to go into the $3 million range, you probably want to have closer to 20% down. And then when you get above there, most lenders actually have a cutoff where they don't really like to lend out more than 5 million. So 5 million is kind of that max loan amount that you can get. And so then if you're going into the 7 to 8 million range, you've got to have enough money to kind of bring that loan to about a $5 million loan. And that's kind of where the cutoffs go. Granted, there are some specific lenders that might go higher than that, but they just become far and few in between that do. So.
Perfect. Yeah, that's good information. Thanks. And then tell us a little bit about like, I mean, we are talking about a luxury buyer and in Utah there's a lot of cash actually, even across the
Mhm.
nation. So if someone does have a lot of cash, why would they leverage it and take out a loan? Or, what kind of options are there in the loan department in that
Yeah, so
way?
as I look at this, a good portion of the borrowers that are buying luxury, they're typically self-employed. They run their own business, they have their own companies. That's kind of the majority of them. Now there are some out there that maybe you W-2'd and they're a really high, W-2 earner, but I'd say there are fewer of those that we come across. And so the main reason for them to not use their cash is because that money is earning them so much money in their business that they're like, well, I'm not going to pull out 2, 3 million from my business to go buy this home because we need that capital to keep things moving, keep the business running. And so that's the biggest thing I see is they'd rather go get a loan. Now, if they go get loan on business lines of debt, typically those interest rates are higher. You might be paying 10, 12, 13, 14, 15% on those business loans. Wherewith if you can get it on a home, jumbo rates are significantly lower than that. And so that's kind of where they see the benefit of, okay, let's get a loan because it's, collateralized by the home, not other business assets. And it's just a good way to go about it. So specifically, when I think of jumbos, there's kind of two different parts of it now. So there's the jumbo loans where we can go look at, those, but there's also different banks that like to portfolio these. And so we just had one recently come up where they'll do a 5-5 arm. So the interest rate stays the same for the first 5 years and then adjusts every 5 years. And so that's a good one right now where interest rates are a little bit higher, right? We're in the sixes, but that specific arm, is in the high fives, really competitive part. And then we also have another one that's a fixed 30-year that because their portfolio, they don't have to fit into the jumbo guidelines. And so on these specifically, they'll still take up to a debt to income ratio of 50%. And so sometimes certain buyers that don't fit in those jumbo ones are best to actually go the portfolio route. And that's something that can kind of be discussed during a consultation.
Oh, I love it. I love it. And is it true? Are rates higher for jumbo loans? Are they the same, lower? What's typical?
Typical, I'd say right now when I look at it, it's very similar. Jumbo rates, I don't think are higher than conforming rates. I'd say they're right in line. Um, and yeah, it's very, very comparable. So I wouldn't say that you're going to take a 0.5% higher right now by doing a jumbo.
Excellent. Excellent. So I think the biggest thing about luxury buyers, I mean, granted, they have higher capacities, but they're just like all of the rest of us. Like, and what they're buying is a lifestyle. Like, what they want is to live in the area they want, to have their kids go to school where they want, or to be close to the mountains here in Utah and all the activities. That being said, doesn't matter if you're buying first time or if you're buying in a luxury market, you really, really need to be prepared. So avoid regrets, ask the right questions, work with a professional. And Zach, you and I would be the perfect dream team to help someone if they're looking to buy here in Utah in the luxury market. So thanks for all of your insight and knowledge, and I appreciate you so much.
Definitely. Thanks, Janet.